All right. Hello and welcome back to Mortgage Nightmares. This is a show where we dive into the chilling world of real life home buying horror stories, from deals gone disastrously wrong to shocking scams and unexpected twists. Mortgage Nightmares reveals a dark side of real estate through the experiences of those who lived it. Join us each episode as we uncover the terrifying truths behind buying a home and providing insights to help you avoid a nightmare of your own. Again, I am your host, Ricky Nava. And for those of you that are listening or maybe watching online, and you might not know who we are, I am a mortgage loan originator, aka a loan officer here in California, licensed in about 11 states. Is that correct? Is that how many states we're licensed in?
Nine.
9 states.
Nine states.
Okay.
Yeah.
All right. I was close.
Maybe you have two others I don't know about.
Maybe I have two others I don't
Yeah,
know about. So, loan officer, licensed in 9 states. I've been doing this for going on 9 years now, but I entered into the real estate industry in 2006. So, been in the part of the industry for a long time. I also have my co-host here, Clay Murray. Want to go ahead and introduce yourself?
Absolutely. Thanks, Ricky. Yes, Clay Murray, also a mortgage loan originator and branch manager of Military Home Loans, one of our sponsors of the show. Happy to do it. Love to do this show. And by the way, new set, new me.
Yeah.
Look at us.
Yeah, I know. Moving up.
I know it, man.
Moving up in the world.
Absolutely. But yeah, been doing mortgages for coming up on 10 years. Actually, just had my 10-year anniversary. And working for a company that's been right here in this market for 20 years. We just celebrated the company's 20th year anniversary.
Anniversary, yeah.
Thank you.
Congratulations.
Last month, yeah. Thank you very much. So, yeah, a lot of mortgage experience between the two of us.
Right.
Which means we've seen some stuff.
Lots of stories, but also we are going to be sharing not just what we've experienced, but also what our listeners and viewers have experienced as well. So feel free to submit whatever stories you have. You can go to mortgagenightmares.com, or you can go onto any one of our social media channels, send us a direct message. We'd love to hear your stories. And the main reason is not just to share them, but also so that we can help other people avoid these same things from happening in the future. I mean, that really is the main point of this show, is mainly to help you so that you don't have to deal with those crazy things that can sometimes pop up. Obviously, some things are
unavoidable,
beyond your control.
Yes.
You can't control that, but the things that you can control, let's avoid those.
Yes.
Right?
We oftentimes are going to share a nightmare, a story that has a happy ending. However, if you guys caught last week's episode, that one did not have a happy ending.
It did not.
This one, I'm really excited to share this one today.
This one does have a happy ending, right?
It does.
But it is.
Yeah. Well, depending on who you are.
I guess depending on who. Yeah, it's a crazy story.
But if you like justice,
it's a crazy story.
This one's for you. Wild. Yeah, we're gonna have some salacious storytelling today, and I'm pretty excited about that.
Well, let's get started.
Let's get into it. All right. So first of all, let me kind of set the scene.
Okay.
This story, as we said, you can submit your stories to us.
Right.
So we're going to have plenty of experience, plenty of stories of our own. Mm-hmm. But this story actually comes from my business partner. All right. Her name is Melissa. We run Military Home Loans together. And this was something she experienced. I was not here for this, but she gave me all the details. And I read up on the story. And you can find the details of this story. I'm just going to say it. It's on the FBI's website. How about that?
Wow.
Yeah. I mean, if you want
to... The FBI was involved.
If you want to be part of a nightmare, you put your name on the FBI's website, and that's a bad go.
Yeah.
That's a bad way to do it. So, anyway, usually when we tell our stories, there's some background mortgage knowledge, some information that we share. Last week, we talked about escrow. Do you remember?
Yep.
Yes. And I remember saying the word escrow can have 3 different meanings. Mm-hmm. So this one is talking about the escrow company and the escrow officer. If you could just remind us what these players are in the game.
Right, exactly. So real quick, if you missed last week's episode, an escrow is the company, which is a third-party, unbiased company that handles the entire transaction when you're buying a home.
Right.
So the escrow officer is the one in charge.
The point person.
Yeah.
Yeah.
The main point of contact for everybody. for all parties involved.
Yes. Yeah, so escrow representing that liaison between buyer and seller, right? When the money needs to be exchanged, it flows right through them.
Yeah.
So, there's a lot riding on a good escrow company. If you talk to any real estate agent or any mortgage professional, they're going to have goods and maybe bads, right? With their experience. We love this escrow company. Typically, a professional has their preferred service provider or escrow company.
And usually the seller gets to choose, right?
Great question. Yeah, good point. So in California, at least in the real estate purchase agreement, it's really a service you can shop for. But traditionally, the buyer kind of forgoes the right to shop for their escrow provider, and they just say of the seller's choosing. And if you're a homeowner out there and you're just Joe Schmo homeowner and you're not in this industry, you don't know who your favorite escrow provider is.
Right.
So you just tell the agent that you've contracted to list your property, hey, whoever you want to go with. So all that is
that could be a good thing or a bad thing because, as a, let's say, first-time home buyer, right?
Yeah.
You have no idea of any companies.
You don't even know what escrow means.
But the seller could choose a company that's bad or a company that's terrible. And we've had some terrible escrow companies and officers be involved.
Absolutely.
The good part is that since you don't know anything, they might be choosing a really good company.
Totally.
Right? But I do want to bring up the fact that if you are a buyer who's bought multiple properties and you already have someone that you like, I mean, you can try and ask and work it into the contract.
Definitely.
And say, hey, would you guys be okay with using my escrow person?
Definitely.
So it's not set in stone that the seller has to choose. Normally they do. But if you have one in mind, you can maybe work it into the contract.
Yeah, almost everything on that contract is negotiable.
Right.
Including who you choose as your service providers.
Right.
But in this case, it was the traditional operation and execution that the listing agent representing the seller chose the escrow company. And then the escrow company usually has one escrow officer. If they do a ton of business, I would imagine they have multiples. But let's just say this gal was like the head of the company, right? Anything that flows through the company as a transaction, she's going to have her hands all over it. So a good amount of pressure on this position, right? And a lot riding on it to make sure it goes smoothly. So
I also want to point out the fact that, and I don't know if you were already going to get to this or not, but they were wearing multiple hats.
yes.
So the escrow
That's true.
officer and company also had a mortgage company.
Yes.
So they were doing loans
Right.
and escrow, which I would like to point out that nowadays, even though that is allowed, it's a little bit frowned upon, mostly because of the conflict of interest. You don't really want one person doing the loan and the escrow and being the agent and doing all these things.
Totally.
But we're talking about a time where it was kind of a free-for-all. So
Yeah, that's
those
correct.
rules didn't really apply.
I've got the article right here, but I believe this was in 2014. So, or previously, I don't remember exactly, but it was definitely a different time. I mean, since then, we've had new legislation. The Dodd-Frank Act has been passed. Graham-Leach-Bliley Act has been passed. All of these legislations that kind of were born out of the mortgage meltdown and the crisis that kind of came through mortgage companies doing it the wrong way. And now we have new disclosures. If you ask anyone for what they used to call a GFE, a good faith estimate, that doesn't exist anymore.
Yeah.
So now we've got loan estimates and closing disclosures and all these things. So
to set the scene, the loan officer was also doing loans.
the escrow officer was
the escrow officer was also doing
loans.
That's important to know.
She was not doing this loan.
Right.
We were doing this loan.
Right.
But she was the
mortgage
escrow
company.
officer. And, remember we talked about typically the listing agent chooses the escrow officer.
Mhm.
Well, the listing agent is her husband in this particular case. So you've got a lot going on here that's like, I don't know, kind of cringe.
The husband who's the agent chose his wife to be the escrow officer,
Yes.
who also has a mortgage company that does loans on the side.
Yeah.
Okay, all right.
Yeah. No, totally on the up and up.
Okay.
So anyway, we open escrow. If you recall, this was another kind of definition of the word escrow is the period of time that you have between opening a contract and closing a contract. That's the purchase, right? Is the escrow period. So they open escrow and she's assigned as the escrow officer and everything's going just fine. one of the first things that happens is the escrow officer needs to know, all right, who am I dealing with? Who am I talking to? Give me everybody's contact information. I need to talk to the seller, I need to talk to the buyer, and I need to talk to the buyer's lender. Well, the buyer's lender has a main point of contact as well. They're the liaison between buyer and escrow officer and underwriter and funder. That's the processor. So in this particular case, my business partner used to be a processor. This was her job. All right, so she got connected with the escrow officer. Hey, we're opening escrow. Here's the important information, the loan amount, all these kinds of things. Everything's going fine. Until one day, she emails, doesn't get a response. She calls, doesn't go through, leaves a message, doesn't get a call back. And this goes on for days. And I mean, you know, during that escrow period, every day is important because the clock's on.
Absolutely.
If you have 30 days to get everything done and you miss a day,
it's very unusual.
You're making it harder on yourself.
To not hear from an escrow officer for days, that is unusual.
Right, because they're right in the middle of everything.
Right, there's timelines,
Yeah. So it was unusual, right? And then finally, my partner, again, Melissa, she found a phone number to call the escrow company, right? The number that she had was direct for the officer, nobody getting, picking up on the other side. So she calls the escrow company and talks to, I don't know who, but basically somebody who could say, hey, here's where your escrow officer is. And oh, by the way, she was arrested. She was arrested and she will no longer be working with this transaction. In fact, we're going to close this escrow. We'll assign a new escrow number. We'll open it up with a new escrow officer. And moving forward, here's who you're going to deal with.
Wow.
Which, of course, you know, was like, oh my gosh, she was arrested. What happened?
Yeah, how often do escrow officers get arrested mid-transaction?
Exactly. Somebody who's got to have a super high level of right and wrong, right? If they're handling all the money for the transaction. But yeah, she was arrested. During that time and investigation and the arrest, like there was no information. You can imagine they're all going to keep that pretty close to the chest.
Right. So what you're saying is no one really found out what truly happened.
Right.
Until after.
Until later. And now, my friends, we have the benefit of actually seeing this information from the FBI's website. But essentially what had happened was over a 2-year period, this was between 2005 and 2007, the mortgage company that this escrow officer and real estate agent, husband-wife duo, had created, they were also doing mortgages and being the heads of those mortgages, right? The originators.
Can I set the scene here too? Because
please.
For people who
if I miss anything,
for people who are listening or watching online, during this time frame, the 2005 to 2008, 2009 kind of,
good call.
It was a different time for mortgages because back then it was like the Wild Wild West. I mean, we had things called stated income loans.
Yep.
And it's exactly what it sounds like. You walk into a company, you state what your income is, and they don't verify it. They don't ask for pay stubs, tax, nothing. You can walk in, you say, hey, I would like to buy a house. I make $100,000 a month. Okay, $100,000 a month. Congratulations, you're approved. Go buy a house.
Yeah.
But those loans were also balloon payment loans. A lot of them were adjustable loans.
Negative amortization.
Negative amortization, which if you don't know what that is instead of paying the loan balance down, the loan balance is actually going higher.
Yeah.
So every single month,
you're owing more and
more.
Until they're finally like, hey, you've got a big payment now.
Until like 2 or 3 years go by, and now you have to pay all that back. That's why people lost their home. So this happened during that time. They were doing loans during this crazy time of stated income, no verification loans.
There were loans called ninja loans.
Oh my God.
No income, no job, or assets verified. Ninja.
Stop right there.
Okay.
I think we have to repeat that again. No income.
Right.
No job, no assets. So if you have no way of making money, nothing in the bank, you can still get approved for a house.
Well, you just say what you make.
That is insane.
None of it's verified. It's all stated. Well, and so now, you know, when we have to collect things like income and W-2s and tax returns, we verify it with the IRS. And it's pretty much automated. There are some clunky times of the year when everybody's filing, but it's pretty much automated. Back then, there wasn't that system created. And it was basically like, here's my tax returns, I'll slide to my mortgage lender, and here's the tax returns I'm actually going to file to the IRS.
Right.
But now we say, okay, here's the ones we got. Is this actually what you filed? And as long as it is, then you're good.
Right.
So yeah, I mean, you could totally fabricate everything. You could state what you wanted, and it just wasn't vetted. So you're right, this was the time when they were doing mortgages, 05 to 07, right before the mortgage meltdown and the crash of 08. Okay? So during that time, and by the way, remember also, like, loan amounts were lower, things cost less, cost of living was down.
Yeah.
So this number is going to sound huge, but if you put it in like today's inflated figures, it's even more. But during that 2-year period, they had over $50 million of mortgages consummated with fraudulent activity.
Fraudulent. So fraudulent meaning like fudged income numbers, right?
Well,
Fudged assets. That's kind of what we're talking about when we say.
no, because remember, that was all okay. That was just what the industry was doing. What these guys were doing, and this is directly from the article on the FBI.gov website. I'm going to read it to you. The defendants were pocketing at least $40,000 a month in commissions. They obtained loans exceeding sales prices and profited the excess.
Oh, wow.
Right. So basically, hey, you want to buy this home for $300,000? I'll give you a new loan for $320,000 because there's some fees that have to go in it, whatever. I'm going to take the $20,000 and put it in my pocket.
Wow.
Yeah. So that's what they ended up doing. I want to read just kind of what they're saying about the defendants. So this is the U.S. attorney is describing these defendants in court. Here we go. Ready?
Yeah.
They are ruthless, greedy, and cunning masterminds of a scheme to obtain $50 million in home loans for unqualified buyers by falsifying job and salary information on applications. And then it goes on to say how much they were actually pocketing. So, I mean,
man,
they did it all, man. They did it all bad.
Let's keep in mind, too, because you mentioned, back then it was okay to state your income. But just because it was okay to not verify income, they weren't saying that you're allowed to lie.
Correct.
You were supposed to be using the correct income.
Yes.
You just don't verify it,
Exactly.
right? So if you lie, it's still mortgage fraud.
Yes. And so there's mortgage fraud by the consumer. If the consumer lies and the mortgage loan officer doesn't know, well, then they'd be in trouble. But this is saying the loan officer falsified the information, which means you tell me you want to qualify and you say you make $10,000 a month, and I say, okay, he makes $15,000 a month. So now I can say you qualify for this higher loan, and I'm going to pocket.
And you're going to pocket the extra.
Crazy, right?
You can't do that now. I mean, nowadays.
No.
You can't just give someone a loan for $20,000 over what they want and pocket that money.
Yep, and that's what we were talking about earlier. Is guidelines have absolutely changed drastically.
Right.
So there's one more piece in this article that I wanted to read, but this is that same U.S. attorney basically telling the court that the real estate agent husband posted photos on his Facebook page of himself posing with his ill-gotten gains, a Rolls Royce, Bentley, and Hummer. Quote, he's standing in front of his Bentley wearing a watch that costs more than the car that I drive.
Oh my gosh.
Yeah.
Jeez.
So there's evidence of them just flaunting it, which is nuts.
I read that article as well, and I want to point out too that it mentions that one of the people they defrauded was their own parents.
Can you? Yeah.
Their own parents.
Right.
That's crazy.
I would imagine, though, although maybe I'm wrong, maybe I'm giving them too much credit, but like defraud their parents and take $30,000, but then backdoor it to them.
Who knows?
Some of it to them. I don't know. Maybe
speculation.
It is. I'm totally speculating.
But
so anyway, couldn't get a hold of this escrow officer. She was arrested, and it all goes to trial, and they absolutely lose, and they are sentenced to 3.5 years, 3.5 years in federal prison, and $10 million of restitution to be paid.
But they made how much? 50 million?
Well, they did $50 million in loans.
Yeah.
What their commissions were, I don't know, but it must have been in the neighborhood of 10.
Oh, I see. So they probably made them pay back whatever amount they thought that they profited from their scheme.
Yeah, I would guess they profited less than that because there's got to be an extra penalty in there too, wouldn't you think?
I would think so.
Because if I made $10 million and you said pay back the $10 million, I might be able to just be like, okay, here it is.
But you know damn well that they didn't just keep that $10 million.
No, well,
obviously
apparently not.
With Bentleys and whatnot, or Rolls Royces and
Both. Right.
That's
I'll take
crazy.
one of each, sir. So anyway, yeah. So again, if we're talking about like a happy ending, justice was served.
Yeah,
Right. We
right.
got them.
Yeah, and the original transaction that they were a part of, it closed.
Yes. Right. So
So-
we got new individuals in there. Buyer really didn't know
Right.
anything about
So
it.
those particular buyers that were part of that transaction didn't get defrauded.
Correct.
They bought their home.
Correct.
That has a happy ending.
Happy ending. You got it. You got it.
Not a
But,
happy ending for the escrow officer and her husband.
No, I guess, we always try and tie this back to how can you look out and avoid a nightmare.
Right.
You would think that the escrow company is going to properly vet their escrow officers. But the good news is avoiding this nightmare today is a lot more likely because you can't do all the things that these guys were doing.
Right.
Right? With all the compliance issues and disclosures and guidelines and regulations. We don't do ninja loans anymore. Right? We're going to make sure that it's a safe process for the buyer and you're not going to be defrauded out of millions.
Basically, the moral of the story is be aware.
Yeah.
Be aware. Pay attention to who you're working with, the people in the transaction. Definitely don't commit mortgage fraud yourself. Don't fudge numbers yourself. Be honest and open with your loan officer about what your numbers really are. But for the sake of the loan officer, you can't really control what they do, but you can see red flags. Okay?
Yeah.
And I'm going to give you an example. I was working with a realtor who we had a client together where we couldn't really get them to where they wanted to be qualification wise, right? The numbers just weren't there. Their debt to income ratio was too high. And we tried multiple things, a lot of different things. It's like, well, if you pay off debt, you can get to here, maybe get a new job, make more money, then maybe you'll be able to qualify for more. It just didn't work with this current situation.
Okay.
But then a family member told him, hey, I know a loan officer that can get it done, no problem. So they went to that loan officer, and right away that loan officer got them, I think, 100,000 more than what it was. Now that's a red flag, okay? Because the debt to income ratio is pretty straightforward.
Yeah.
It's your debt and your income.
And that's
right?
it. And the maximums are written in the guidelines. So it's not like he could have gone to a higher DTI for them.
No, everybody follows the same guidelines, especially nowadays, all the way across the board. If it's an FHA loan, it's an FHA guideline that you have to follow.
Correct.
So my first thought was, how is that even possible? But then as we found out more, and as the agent found out more about this person, he found out that this loan officer will pretty much do anybody's deal, get them any purchase price they want. It doesn't matter what their income is. Boom, red flag.
Yeah.
So pay attention to things like that because obviously we're speculating, but it sounds like this loan officer is fudging income numbers and committing mortgage fraud. Now, I don't know if they're still in the business, but the whole point is that you can pay attention to things like that.
Yeah.
Right? If this person says you're qualified for more than what you think you're qualified for, just pay attention to that. Because even if you weren't involved and you weren't part of it, imagine you go to your loan officer and they qualify you for X amount based off of the documents you gave them. You don't know if they're going into a document editing software, changing your income to make it look like it's higher, submitting that, getting you approved. You don't know that, right? But at the end of the day, if they get caught and they come question you about mortgage fraud, you're going to have to prove that you had no knowledge of that happening. And that's going to be really hard.
Yeah.
So even if you really, truly didn't know, it's still going to be hard to defend that in court because it's your word against theirs. So just be very, very careful when you pick a loan officer. Always, always use either us, obviously, but if you can't use us, go off of a recommendation.
Yeah.
Don't just go find some random loan officer online, because they have a good deal on rates or whatever it is. Use somebody that you can trust.
We're not all created equal.
Absolutely not.
And you're right, that fraudulent activity is shared. Because if the loan officer commits it and then you were essentially like compliant in it.
Right.
And if you commit fraud and the loan officer knows and doesn't, blow the whistle, then the loan officer is compliant in it as well. So it is a shared responsibility to make sure we're doing this legally, lawfully, and compliantly.
One more thing I want to mention too is when it comes to fraud, it's not just about income. It's not just about fudging income. Actually, one of the main causes one of the main things that people lie about on their loan applications
Say it.
is occupancy.
Occupancy. Yeah.
Occupancy.
Yep.
So what does that mean? That means that you're going to say, oh, I'm going to live in the house when you're really not going to live in it.
Why would they do that though?
Well, because if you're living in it as a primary residence, you get a lower down payment, you get a lower interest rate, right? Versus,
lower
I'm buying
fees.
it. Yeah, I'm buying it as an investment property.
Right.
Now you're paying more fees, more money down, higher interest rate. So another common one. Oh, I'm going to use so and so as a co-signer, a co-borrower, mom or dad, and then we say, okay, great, but since they're not going to be living with you in the property, we have to count their mortgage against them, we have to count their rent against them, their housing expense against them, and then they go, oh wait, actually, you know what? They're
going to move in with me.
Yeah, they are moving in with me just so that they can get qualified for more.
Yeah.
That's also mortgage fraud.
Right. Why would they do that? They have their own home.
Right.
Right. We're going to ask all the questions of how that makes sense. But
Yeah. And if you think you're not going to get caught, hey, maybe you won't. But that one-off chance that you do, it's not worth it.
And we already know that if it's a big enough deal, guess who's coming knocking? The FBI. So it's really not something you want to mess around with. Mortgage fraud's a real big baddie.
Definitely not worth it.
Yeah.
Cool.
Well, I like that.
That was it for today. Next week, we will have another story. Remember that you are more than welcome to submit your stories. We'll make sure that it's anonymous whenever we share it. And also, if you have any other questions for us, you can send us direct message anywhere on social media. Visit the website, mortgagenightmares.com. And remember, it really does matter who you work with. So be careful out there and make sure that you avoid a nightmare of your own.
Absolutely.